In today's video, I will teach you how to get an SBA loan. So we're going to be covering what are SBA loans, what are the pros and cons of SBA loans, the SBA loan eligibility requirements. I'm going to give you some advice on SBA loans as well, and where do you get an SBA loan? Okay, so let's start with this. What is an SBA loan? Okay, so here's what you need to know. The SBA is the Small Business Administration, which is a government agency that focuses on helping small businesses. So it's very important to understand that the SBA does not lend money. So here's how it works. Okay, so let's just say that you try to get a business loan from Chase Bank, okay? Now, why would Chase Bank reject your loan request? Well, essentially, they will reject you if they believe that you won't pay them back. Because if Chase Bank lends you money and you don't pay them back, then Chase Bank loses money on you, right? So here's where the SBA comes in. The SBA will give Chase Bank a guarantee. So for example, if Chase Bank gives you a small business loan of, let's just say $100,000, the SBA will give an $85,000 guarantee to Chase Bank. So this is, of course, great for Chase Bank because it protects them from major losses if you can't pay back your loan. So if Chase Bank gets a guarantee from the government, from the SBA, then it's less risky for Chase Bank to lend you money. So therefore, Chase will be more willing to lend money to small businesses. So the SBA will guarantee a percentage of the loan up to 85%, but honestly, it really doesn't matter to you because that's between the SBA and the lender. But what's important to understand is that the SBA does not give an SBA loan. The SBA simply gives a guarantee to the lender. Now, I want to show you the most common types of SBA loans. They're going to be the SBA 7A loan, the SBA 504 loan, and the SBA microloan. Okay, so the SBA 7A loan is the most popular option. So this money can be used for a variety of purposes: daily operations, buying equipment, startup expenses, acquisition, etc. So SBA 7A loans are up to $5 million. So that's as of today. So that number may change in the future. But the average SBA 7A loan size is $443,097. The repayment terms, 5 to 10 years. There are some exceptions for example, for real estate, which could be 25 years. So the interest rate can be fixed or variable. So if it's a fixed rate, then the interest rate doesn't change for the life of the loan. If it's a variable rate, then the interest rate will be pegged to a benchmark such as the prime rate plus an additional margin. Okay, now let's cover SBA 504 loans. So these loans are used to purchase real estate or big equipment. So the maximum funding amount can be greater than $5 million. It depends on the purpose of the loan. So the average SBA 504 loan size is $1.1 million. Repayment terms, 10 to 25 years. Okay, so for these, the interest rate, it can be fixed or blended. So if it's a fixed rate, then the interest rate won't change for the life of the loan. If it's a blended rate, then a portion of your loan will be a fixed rate and the other portion will be a variable rate. Now, SBA microloans offer up to $50,000. So this money is generally used for startup costs, inventory supplies, and smaller equipment. So microloans cannot be used to purchase real estate or pay other debts. The average SBA microloan is $13,000, and the repayment term, it could be up to 6 years. So microloans usually have a fixed interest rate, so the rates won't change over the life of the loan. However, interest rates on microloans are typically higher than SBA 7A and 504 loans. Okay, now what are the pros and cons of SBA loans? We're going to start with the pros. So SBA loans offer competitive interest rates. So this is in comparison to other types of financing options. SBA loans may be easier to qualify for compared to other bank loans because you have to remember, SBA loans are partially guaranteed by the government, and this reduces the lender's risk. Another pro of SBA loans is the size of the loan. So you can get a loan for millions of dollars or for a few thousands. So there's a lot of flexibility in terms of the sizing. And another pro is that the SBA loan gives you longer repayment terms. So it's up to 6 years for microloans and 10 to 25 years on the SBA 7A and 504s. Okay, now let's cover the major cons of an SBA loan. So a personal guarantee is required. So the SBA requires a personal guarantee from business owners, meaning personal assets may be at risk if you don't repay the loan. And collateral may be required. And also, I mean, this is another big one, it's a longer approval process. So I want to show you how long it typically takes, which is important if you need the money relatively soon. Okay, so here you can see the type of SBA loan and the typical time it takes to get approval and the time it takes to get funded after approval. So the SBA 7A loan, it will take about 2 to 4 weeks from application to funding. The SBA 504 will take about 2 months to 4 months. Microloans will take about 2 to 7 weeks. Okay, so I just want to say this. You know, it would be terrible if you apply for an SBA loan and you wait for all this time just to find out that your loan request is rejected. So it would be a big waste of time for you. So many business owners, they may not have the luxury of that cushion of time. So I want to tell you this, to help save time and frustration, I created a tool to show your probability of getting approved or rejected for an SBA loan. Okay, so just in case you didn't know, I own a lending company, Clear Value Lending, and we help small businesses get small business loans, and that includes SBA loans. So if you come to my website, you can use my tool to see your probability of approval based on just 4 criteria. Your loan amounts, how much that you're requesting, your monthly gross sales, how long that you've been in business for, and your credit score. And then you'll see your odds of approval right here. And as you can see, I made it very simple. You don't need to give your personal information. You don't have to give your email. You don't need to register or sign up for anything. I'm just trying to be helpful. So as you can see, we calculate your odds of approval. This is our proprietary calculator that we built in-house. All the information is out there to calculate this. We just needed to piece it together, which we did. So please come check it out. I'll leave a link for you down below. Now, I want to tell you about the eligibility requirements to get an SBA loan. So the first thing is that you must be a for-profit business. So your business must be officially registered and operate as a for-profit entity. Nonprofits are generally not eligible. You must operate in the US. So your business must be located and operating in the US or its territories. Number 3 is that you must meet the SBA's definition of a small business. So this is based on industry, revenue, number of employees, etc. The SBA has a tool to see if you qualify, to see if you meet the definition of a small business. So number 4 is owner equity investment. So the business owner must have invested their own time or money into the business. So basically they want to see that you have skin in the game. Number 5 is demonstrate ability to repay. So the business must show the ability to repay the loan. So this is based off financial projections, revenue, credit history, etc. Number 6 is that you must exhaust other financing options first. So the SBA wants to see that you attempted to get financing somewhere else. Because you have to remember, the SBA loans are meant for businesses that cannot get a loan elsewhere under reasonable terms. Okay, number 7 is that you must use your loan funds for approved purposes. So money that you get from an SBA loan must be used for legitimate business purposes. And number 8 is that you must be in an eligible industry because some industries are disqualified. So for example, pyramid schemes don't qualify, gambling operations, lobbying firms, etc. Certain industries, they just don't qualify. Okay, now let's look at the financial and credit requirements. So the first thing is that they're gonna look at your credit score. So it's gonna be so important. Credit score requirements, they're gonna be varying by the lender, but generally, you need a minimum of 650. So the second thing is that they're gonna review your cash flow or your projected cash flow of your business. The third thing is that collateral will sometimes be required. So this is going to be more common for loans that are over $25,000. And the fourth thing is that business owners with 20% or more ownership must personally guarantee the loan. And the fifth thing is that some SBA loans will require a down payment of 10% to 30%. So what is an SBA loan down payment? So this is money that you have to give up front when you get the loan. So you can think of this as like a security deposit. So this reduces the lender's risk and shows that you're serious. So if you're approved for a $100,000 loan with a 10% down payment, then you must contribute $10,000 before receiving the remaining $90,000 of your loan. Now, I want to give you some advice on SBA loans. I'll give you 4 of them. So the first thing is that if you have a low credit score, that's really going to hurt your chances. So I'm telling you, you should do what I did. Check your credit reports to see if there's any errors on your reports. So you can do this completely free. So when I corrected an error on my credit report, my credit score jumped up by 100 points, literally 100 points within a matter of days, so no joke. My second piece of advice is that you should shop around for lenders. So I'm telling you, not every lender is the same. So some lenders may be more open to giving an SBA loan for restaurants and another for landscaping companies. So if one institution rejects you, then you can always try another. Okay, my third piece of advice is that there is something called an SBA Express loan. So if you need to speed up the process, then you can request an SBA Express loan. But this is only if you're requesting $500,000 or less. So there's pros and cons, but the pro is that it's a faster approval process. However, the con is that it's going to have a higher interest rate compared to a standard SBA loan. And my fourth piece of advice, this along with any other loan, is that you need to read the terms and conditions. I'm telling you, watch out for any guarantee fees, prepayment penalties, etc. Just be aware of them, understand them, please. Now, let me tell you, where do you get an SBA loan? So you can get SBA loans from a bank, credit union, or online lenders. So a lot of people like to start with a bank or credit union where they already do business because a relationship is already established. However, online lenders offer faster approvals and the qualifications are actually easier. So one other option that you have is to go to the SBA's website and use their lender match tool to help you find a lender. So you just click that button right there to locate a lender. But again, just so you know, we at Clear Value Lending offer SBA loans and we'd be very happy to help you out. So I'll leave a link for you down below. I hope that this has been helpful. Please subscribe. Thank you for the support and wish you a very nice day. Take care.